Life and Annuities. Welcome again to a Life Weekly program. Today I have our National Sales Director of Brokerage for Transamerica, Mark Steuven. Good morning, Mark. How are you doing today?
I'm doing very good, Kathy. Thank you for letting me be here today.
Well, I'm glad you're joining us. Hey, we titled this Transamerica Updated. You've got some really good information for us, what's going on with Transamerica. This is a hot button because a lot of agents are calling and asking, hey, I need to get appointed with Transamerica. Can you fill us in on what's going on?
Absolutely. There's a lot has went on this year. We've been in a trying time here recently with the low interest rate environments that have changed a lot of product offerings that are going on out there, and it's impacted a lot of the industry, and we haven't been immune to that. So that's changed some of the things that we've done, and really what we've focused on at our core is our living care riders, which I'll talk about some today so that people have a good idea of that. But a lot of the things that we're working on is to try to get ahead of the curve. What's the next best thing out in the marketplace? And so we have spent a lot of time over the last 6 months studying consumer demographics. One of the things that carriers are poor at doing is mining all the data they have with all their policyholders to find out, who are actually buying their policies, the demographics of those consumers, and then what's the change going on in the marketplace so you can address it. We're at a 50-year low in life insurance sales, so things have got to change, and we're trying to be on the forefront of that. I think to start out today, I'd just share with you some of the data that we found out, and some of it may not be new to everyone, but if you've listened to other calls or been at industry meetings, you may see this and it may just strike a chord with you. But one of the things that we have seen a lot of is that the world is quickly becoming so-called experts because of the internet out there. When you're visiting with consumers, they're constantly going out and checking things online before they actually meet with producers to try to do some homework of their own and become well-versed in their opinion on what's going on. And one of the problems that comes is that information is out there all over the place, but it's taking that information and turning it into knowledge to make good decisions that's hard to come by, and that's where they really need us and need all of you that are on this phone call today. And that is that at the end of the day, people are still wanting to use planners, professional planners and agents that know this business, that have done the research on what's the best move for them as a consumer. We studied several thousand consumers out there, and 2/3 of them still came back to us and said they want their agent to understand their risk tolerance and help them plan. So you'll see a lot of studies going on. I saw a couple this morning actually even, where people are concerned about Google getting into our space and Walmart getting into our space and offering insurance. And I think if we just look at price, that's always going to be a threat. But what I'm going to talk to you today is about value, and that's something that those groups I think would have a very hard time ever overcoming. The other thing that I picked up...
Oh, I'm sorry. I was just going to say the value is the biggest thing with any carrier, and that's what everybody's asking for nowadays, so that's awesome.
Yeah, I think that, if it's just come down to price, we're all going to be in trouble if people just go out and buy the cheapest, but that's going to definitely have a disservice to our consumers. The other piece of information I found very interesting is that 50% of all the people out there want their agent and producer to really understand their goals and dreams and values to help them plan. It used to be that when we had our discussions with our consumers, you go back to the 90s and everything was about taxes. It was so easy to sell insurance in 1995 when I got in this business because the estate tax was $600,000. So many people as a couple had that kind of an issue and would buy insurance to help offset taxes. Well, now there's very few couples out there that have $5.4 million that are worried about estate. So we have to change our discussion from taxation to more of a legacy planning. And I would suggest to all of you, there's a really neat poll out online that CBS has done every year. They've done it since the 30s. And this is something that I would show consumers because the consumer sentiment has changed out there. From 1930 till about 2007, the next generation has always felt that, or this current generation always feels the next generation is going to be better off. And for the first time in the last like 5 years in a row now, this generation feels the next generation is going to be worse off. And so really what we do is going to be taking pennies today and passing out dollars into the future to help that next generation from struggling. And I think about that all the time. I have 2 young kids. I grew up all the time with my mom having conversations with me saying, you know, you're going to have so many more opportunities than I did. And that still, those conversations, I can bring back where they happened and how they registered in my mind at the time. And I look at my kids and I realize they're going to have a very tough road ahead of them. And so we have to change our discussions with consumers. One of the things that they've come back to us and said is they want their producers asking them more about what's important about their wealth and what kind of life they want for their children. And that kind of discussion is going to get at the income replacement type of solution that consumers are really needing. We have to send out dollars into that future if we want the next generation of teachers and social workers and you know, mission workers, all these type of things that we know don't pay that much are going to be even harder in the future. And a lot of people want to pass those values down to their kids and grandkids. And so what we do can really address that, but we've got to open ourselves up to those discussions. One of the other things, and I just got back from a meeting 3 weeks ago, and it really bothered me, so I was going to talk about it for just a second, is I went into the meeting and people were, the presentation was titled about the next niche market being women as investors. And that's completely foolish. I mean, right now, women control over 60% of the wealth in the United States. They're far past a niche marketplace. They are your consumers. And I'm going to suggest they're your best consumers. When you do the polling and studies, women view wealth as protection. That's very important. If you look at the male counterpart, they're looking at wealth as how much of it they have. So when you're talking about life insurance and protecting families, that's a natural consumer for you to talk to. They're more likely to use the people on this call as planners and use that personal resource, and they have a strong sense of belief in life insurance. So you'll see, and I think you'll see this more. One of the things they talked about, they've changed the look, all their marketing materials and everything. That stuff is just not going to move the needle. You're talking to the sophisticated investors that are making major decisions in households today. And if you don't think that, you'll have a problem down the road, because 75% of women fire their spouse's advisors within 2 years of death because they haven't been brought into those discussions. So that was something that has been a changing consumer trend as well. And then lastly, which kind of sets up what I'd like to talk about today, is the sandwich generation. This is something that what you're seeing today is that the family dynamics have changed. You have adult children moving back in with parents, and you have parents that are just completely petrified of having to take care of their parents. So you've got both ends of this compressed perspective that's going on out there. In fact, over a third of all people of parents are concerned, or mom and dads are concerned about taking care of their parents, and at the same time, over 2/3 of their kids are moving back home. It's unbelievable what's changing in our demographics today. And so one of the things that we have to do more and more when we're planning is to really find out, get at the crux of that consumer's issues and find out who the beneficiaries are. When I started in this business, you would get incomplete forms, and I'm sure Kathy's team's seen this many times, where beneficiaries weren't complete. So you call up the agent, you say, you know, I don't have the spouse's information, and you get their social security number and fill it in. Well, now that's completely changed. I mean, that you see parents, brothers, sisters, family members as beneficiaries, because the responsibilities have changed of who's taking care of the kids in the next generation. So it's completely changed the whole consumer demographics. So with that, you know, the thing that I think is most important, and you're seeing the trend that's going on out there, is the change in products. It really goes to that value-driven sale. People are looking for more out of their policies today than just a death benefit. And we talk about that word all the time. There's what benefit is there in death, but yet we talk about that all the time to our consumers. And people want more out of their policies than just pay at death. And that's what's driving these living care features is people want help if they're going to live. And people are living longer and they're having chronic and critical illnesses and they don't have the funds to care for that. And so that's really driving these type of sales. And we have to get past the fear, and I see this all the time, of producers and stuff that are always quoting on price. We've become reliant on all these quoting systems like iPipeline and CompuLife that show us the cheapest. And that completely misses the value in the products we have and the services we provide. And we oftentimes, I'll talk to producers at a lot of meetings, and they're like, well, my customer wants the cheapest, so I have to show them the cheapest. But that's not really true. That's just what we think. I mean, as consumers, if we always wanted the cheapest, in the morning we would line up at McDonald's to get that cup of coffee. It's $1 in most cities. But if you go to most cities and Starbucks, you'll wait 8 cars deep for a $3 cup of coffee. So consumers are willing to do that. I mean, if you go out to restaurant habits, the Chipotles of the world, these fast casual restaurants that charge a little more are where everybody's eating. They don't eat like they used to at McDonald's and Burger King and places like that. But so the world is not driven by price, and our industry is really the last one that is getting that. We still think all consumers base their decisions on price, and I was going to suggest that they look at value. People want to have these 2-for-1 sales, which is what these living care benefits really address. So is it all right, Kathy, if I kind of go into those products a little bit and what we've done to address that?
Yes, please do.
Okay. You know, one of the things that we came out with a few years ago was our Trendsetter LB product, our living benefit term product. And I'm very passionate about that product because a little bit about my family. My dad had a stroke 10 years ago, has lived in a nursing home in the middle of Nebraska now for 10 years. We've spent every penny of my family's assets to keep him in that facility because we couldn't care for him and my mother couldn't care for him at home. So it's important to me that people talk about those type of long-term care benefits and long-term care insurance. I've seen what it does when you don't have it. I also have a mother who's had a very rare form of pancreatic cancer for 5 years now. At stage 4, most times when people have pancreatic cancer, they die within a year. But her VHL is the name of it, is very rare. It progresses slowly. So I know what that kind of illness does to a family. And I'm sure everybody on this call has had somebody they know that's in one of those situations. And so we came out with this benefit and product that not only pays out if somebody dies, but if they live. And I wish it would have been there when I was helping my parents plan, but these are new. And luckily they're there now. So we can start talking about those. And so what I'm going to talk to you about today, and I would use this in my discussions with consumers, is to talk to them about new term insurance, not old term insurance. Old term insurance just pays out a death benefit if you die in 20 or 30 years. New term pays out a death benefit if you die, but could also pay if you live. And so the benefit of that living benefit product is it has chronic and critical illness. Now, chronic is important. For those of you that don't understand on the phone, most carriers look at chronic as if you can't complete 2 out of your 6 acts of daily living, your ADLs. And that's what this would do as well. But what it also covers is Alzheimer's. And I got to tell you, for the longest time in this business, there was nothing that would help somebody that had Alzheimer's. And yet it's our #1 problem in the U.S. going forward. People living a long time in facilities that are, they have perfect health, but they don't have the ability to be home alone. When I go see my dad, there are many times I walk in there, and I've said this, and I feel bad saying it but it's true. I was talking to one of the people there that they were a little older than me. I'm 42. They were probably about 48. And I said, I appreciate all they do for my dad and looking after him. And and how much it means to me. And they just said, thank you, yes, yes, or answer me back. And one of the staff people came up to me and said, it's so nice that you and your brothers talk to the other patients in here. A lot of times their families don't come and see them very often. And I thought, oh my gosh, I thought I was talking to somebody that worked there. They're walking around completely fine, but that person had such an early onset of Alzheimer's that they'll be there the rest of their life, but could be 30, 40 years. And so that's the kind of stuff that this product would help. It would also help offset expenses due to somebody that has Alzheimer's. So I think that's really important to know. The other thing it does is it covers 8 critical illnesses, including stroke, cancer, and heart attack. One of the other big ones that gained a lot of notoriety the last 2 years is ALS with the water bucket challenge. That also is covered in there as well. So if somebody has that and it changes their life expectancy, they can actually access their policy to get cash to help with those expenses. So to me, that's where it's all at today is why just sell for a death benefit, sell a product that has these benefits on there. The sad part, there's only 2 carriers that are out there that have that. We're one of them that you can get through. Premier is our living benefits product. And I would tell you to quote that all the time. You're going to find people will love the product, and the cost difference is minimal. For somebody that's buying a $500,000 policy at age 50, you're maybe talking $5 a month difference. So why wouldn't somebody pay $5 more to have that type of access? The problem is if you use the quoting systems that are out there, you may have to scan down a page or 2 to find the price of it. But to me, that's where the value's at, and the consumers love that type of product because of that added benefit. So that is really what's taken over for us on our term sales is we still sell a lot of what we call Trendsetter Super, which is our cheap price product. As I said, a lot of people pay for value. There is still plenty of people in line paying for that dollar coffee. There are a lot of people that are concerned about price. You have that product as well, but you also have that product for those people that are willing to pay a little bit extra for the value. And to me, that's where it's really at. I think at the end of the day, we're living in a world where people would love to buy long-term care riders. I mean, if we could get everyone to buy or long-term care policies, that's the Cadillac plan, to help them. People just aren't going to buy it. And the problem is that if you buy it and you don't use it, you lose it. So these linked benefits are becoming more and more attractive to consumers at the end of the day. Just to kind of explain how it works, the number one question I get is, okay, I love this concept of paying out if somebody has a critical or chronic illness and they're still alive, but how does that work? So what happens is that if somebody has say a critical illness and they have a stroke, say they're 5 years into a policy, they will actually, if their life expectancies change, they'll resubmit their doctor records in the home office, they'll reestablish a life expectancy, and based on the severity, they're going to make an offer to that consumer to how much cash they'll accelerate to pay them today. And I've had a lot of people say, well, okay, the life expectancy is 10 years and there's a $500,000 policy, the offer is $280,000, why is it different? Well, one is because you're taking a future value and turning it today into a present value. That's the major difference. But also the offer depends on the severity. But what I always say to producers is think about this. Think about all the consumers you meet with. Very few people have the money to help themselves when the worst thing that can happen, they get so sick and live and they lose their house. Their kids can't go to college. They have to tap into every dime in their retirement that they've worked for and had set aside for a certain plan. Everything has been derailed, and you sold them a policy that's going to help them because they lived. I don't think they're going to be worried about the offer of $190,000 or $210,000. That was money they would have never had, and you sold them a policy that helps them when they live. So I think that is where the story's at. If I think of my own situation and people I know, we pass the hat all the time and try to help out families, or we set up funds at churches and at banks and stuff to help people. You can do that today and do that 50 times what is going to be raised out there. So I just think it's important to really look at the value of that type of product. But it works very smooth. We've had several claims already over the last few years. We've sold this product, and there are people in their 40s. I mean, the market for this product is not your, I would talk to this product to your 60s and 70-year-old people. You can actually do a 10-year term up to somebody age 80, but your market is people like me, 47-year-old consumers that have young kids that are buying term insurance today for a few extra dollars that would gladly pay it. I think that is who your market is for that type of product, along with the natural market of your 50s and 60-year-olds that are already thinking about long-term care, do they have it, and would love the idea of that linked type of product. So Kathy, have we had anybody type in any questions so far on that I could address before I move on?
Yep, I do have a couple questions here.
Okay.
If you're using the living benefits, how does the company recover their money if the policy is canceled before the insured dies? So
Say that one more time.
If you're using the living benefits, so if the client's already pulling money, accelerating the benefit,
yep.
How does the company recover their money if the policy is canceled before the insured dies? So
okay.
they start accumulating or accelerating some of the money first and then cancel the policy. Can you explain that?
Couple things that make that easier is when you're drawing down that death benefit, the consumer's only going to pay the premium on the remaining death benefit. So more times than not, what we've seen already is that people for like a critical illness are going to accelerate 90% of the death benefit right away. So they're only left with more like a final expense type of policy. So they're only paying a few dollars a month to keep it in force. And it's essential they do that, because if they were to let it lapse, you could run into some taxable issues. So that is something that's very important. But one thing that's important is, whereas the old type policies that were out there, the consumer bought a $500,000 policy, they took out $400,000, they still paid premium on a $500,000 policy. They'd only pay on $100,000 today. So it is cheaper. And for us as a carrier, we're kind of agnostic to it, because normally when somebody gets sick like that, the last thing they're going to do is let their insurance lapse, because they know that they've kind of met the idea that their end is going to be inevitable, and they have an idea of it. So they usually don't tend to let it lapse. The other thing you could do is you take the remaining death benefit. And so we're agnostic. We're going to be paying a claim. So whether we pay out the money now or in 3 or 4 years, that's what we price into that. But the other thing is that a lot of people will take out the 90%, leave a small death benefit, convert that to just a UL product to make sure that death benefit remains in force past that level term period. So there's a couple options there.
Okay. Explain this to us, too, because this is an acceleration of their death benefit. So if they accelerate, let's say they have a $500,000 policy, they accelerate $400,000, they're not going to really receive a check from the carrier for $400,000, correct?
They actually do. And one of the nice things about this is that you can use the money however you want to. You can use it to pay for long-term care needs, but you could also use it to pay somebody else to take care of your family member. Once you take out that disbursement, and right now the taxation is viewed that it's not a taxable event for this reason, but you can use it wherever you want to. And that's important to note, because I look at my family. We tried to bring my father home from the nursing home to a house that was built in 1952, had the small door jambs, and we had to build a ramp to get in the house. When it didn't work and we took my dad back to the nursing home, we spent $20,000 redoing that house because he completely destroyed everything in it, trying to get that wheelchair around. And so that type of money could have been used to help those costs. So one of the benefits of this type of product is when they take the cash, it's theirs to use. And it may keep them in their house, it may keep their kids in college, but that money can be used how you want to. If you had a product out there, and this one doesn't do it, but it's important to note there are some products out there that are reimbursement type products, and a reimbursement type product is going to require receipts for care that you would then have to turn in for that. And so you would then require that you have proof of your expenses. But this type of product and benefit is not that, it does not work that way. They get the check to use how they wish.
Wow. Okay, a couple more questions. One on that again.
What's that?
I'm sorry, what? Oh, I got a couple more questions.
To me, that's the value of that type of product. How important to be able to take that money to do whatever you need with at that time.
Right. That's awesome. Okay, going back to that question again. So if you have a $500,000 policy and you accelerate the $400,000, most carriers today will keep about 20%. So you guys don't do that? Depends on when they accelerate. They get the full $400,000 check?
Well, the calculation of it is where it is still going to be important. So if they have a $500,000 policy and they are going to accelerate it, the company is going to kind of make you an offer, basically. It's almost like settle today for that. So they may say, well, you know what, you're now your new life expectancy is 3 or 4 years. It's a very severe heart attack that causes problem. You know, your gross amount that you could accelerate is 90% of 500,000. So what is that? That's say that's 400,000. Then the company is going to look at the time frame and stuff. You may end up netting, $320,000. So your gross amount's one thing that you can accelerate, and then based on the severity and what year the policy it's in is basically an offer is made. Then when that offer is made, that client gets that check to do whatever they want with. They may say, you know what, I have some funds today. I've got kind of my offer. I've got some funds today I'm going to liquidate first. I've saved some money. So I'm going to pass on that offer today, and then they could maybe in a year from now, if their health has got worse, then go ahead and redo that again, reestablish a life expectancy, and get a different offer, basically.
Okay. Got some good questions coming in here. Does this product with living benefits also include guaranteed minimum death benefit?
Because it's term, this is on a term policy, you don't really have a guaranteed minimum death benefit. So if the policy, if you buy a 10-year term and say in year 9 something happens, you're going to have to, and you take out the money, you're going to have to convert that into a permanent type product. There's no guarantee like there would be on a traditional product that has a long-term care rider. It's still term insurance, so it doesn't really have that guaranteed death benefit.
Okay. Someone's asking, taxable if critical illness is paid out and the client survives the policy term and doesn't keep the policy in force after the term period?
If they don't keep the policy in force, it could become a taxable event. That's something you would have to consult on. We've done some, the current approach is if they keep the policy in force, it is not taxable. But if they lapse a policy and you take out money out of a policy, then it could become taxable, yes.
So on that hand, if they have a 20-year term with the LB rider, they accelerate, and it's year 18, the money that they're getting out in year 18, they outlive the policy because the policy is done within two more years. They're still alive. That could be a taxable event.
It could be. So that what we suggest to those people is to take the remainder and just convert that over to a small policy so that doesn't happen.
Okay.
And now there's one state in California, actually, you can accelerate 100% of it for a critical or chronic or critical illness. And so actually you can liquidate the entire policy and it ends, and because of that, it's not a taxable event at all. But that's only in California. The other states, the most that you can accelerate is 90%. So you always have a 10% death benefit left over to which you would have to convert if you're toward the end of the term. Okay,
that's a good option.
Yeah, but you're talking then you're only going to be converting. The most you can buy on a Transamerica LB is $1 short of $1 million. The most that you can actually accelerate for a living benefit is $500,000. So you're not going to have a big remaining piece that you're going to have to convert at the end.
Okay. Does chronic care have to be permanent?
Does chronic care? Yes. You'd have to continue to not be able to do 2 out of 6 ADLs. So yes, in that regard, that is the qualification you have to meet is 2 out of 6 ADLs or Alzheimer's, or not just Alzheimer's, cognitive impairments, which Alzheimer's would cover. So yes, it would have to be something that would continue to not be able to meet those 2 out of 6 ADLs to keep doing it. With chronic illness, you can accelerate up to 24% a year, and so you do have to each year kind of re-qualify for a chronic illness.
Is it available on your permanent policies, the chronic care and critical care rider?
Great question. On the IUL product that we have, our Transamerica, we do have a long-term care rider. And that long-term care rider is more of a true long-term care rider. It's a chronic illness rider, not a critical illness rider, so the 2 out of 6 ADLs. But because it's on a permanent product, as a producer, you're required to have your long-term care certification to sell that, which comes with additional CE. When you sell the Trendsetter LB, that is a feature built in that product. You don't need any additional licensing for it. That is just a life product, so you just need a traditional life license. But we do have a long-term care rider on our IUL product. And believe me, that gets a lot of play. A lot of people are leveraging those permanent long-term care riders on those products just like they are living benefits. That is the hottest thing right now is long-term care riders.
I can see that with today's world.
Yep.
Okay, still more questions coming in. Are there any convertibility restrictions?
Convertibility restrictions are always going to be that it's going to be based on the products that are available at that time. So, you know, it's hard to say if it's right now, if somebody, we allow somebody in the first 5 years to convert to our IUL product, or any time after that or before we have a conversion UL product. But it's based on the products that are available at that time. So that's really your only limitation.
Okay. Someone's asking, so it won't pay in case of an accident?
Correct. It actually would have to change somebody's life expectancy. If that accident was severe enough and changed their life expectancy and they had a chronic, you know, they became where they couldn't complete 2 out of 6 ADLs and there'd be chronic illness that would happen from it, it could. But if they had just a traditional accident, went back to work, something like that, it wouldn't cover it. It does have to alter life expectancy.
Okay. And we're again asked, can you convert to any permanent product?
Well, as of right now, you could convert to any permanent product, but I hate to make too much of a statement on conversions because, you know, with the environment today, you don't know what products will look like down the road. So it would go to our permanent product portfolio, but exactly what that will be and when at that time would be hard to say.
Okay. Okay. And if you were doing a conversation with a client and to bring up the LB products or even, you know, your IUL with the long-term care rider products, is there like a certain question that you would ask your clients to get them interested in the living benefits?
You know, one of the things that I talk about to people, and is to talk about, you know, family history, if they have any family history of diabetes and stuff like that are going to be your precursors to having living care needs down the road. And I just talk to people about, you know, would you be willing to pay a few dollars extra to have that protection if you lived? I mean, do you have the money set aside and saved that if something happens to you, you could continue to meet your mortgage obligations or to have your kids in school? And, you know, when you're doing that profile with clients, say, you know, I think it's important we pay an extra couple dollars to have this type of benefit because, you know, I can see that you want your kids to go to this school down the road, or maybe they're in a private school today, and, you know, that clearly is important to you and your values. But if something happens and you live, we need to be looking at that. You know, there's standalone critical care policies, standalone long-term care, but the vast majority of people just aren't paying for that today and don't like the idea of paying for something and losing it. But I also talk to them about, I'm always upfront about how the claims process works when I go through it as well, especially on LB. And I always tell people, you know, we buy car insurance But we don't know when we get in that car accident if it's going to be a fender bender or if it's going to be a total loss or a collision, you know. So I don't know how much I'm going to be able to give you today, but wouldn't you like to be able to protect that on your life if something happens? And, you know, somebody said, does it cover an accident? So if you have an accident, you've got to use your emergency funds. But if something is more towards a major accident or a collision or something like that, wouldn't it be nice to have that protection to help your family if you live? But I think it's so important to really talk about this as a new wave of products, because we're really one of two carriers that offer that type of product on a term chassis.
Wonderful. Okay, so I have another question out here from another agent. For our current policyholders of Trendsetter Super, do they have to go through full underwriting to change to the LB product?
That's another great question. We have a program called Top and Top Plus, and as long as we can send out the parameters to everyone, but the gist of it, as long as somebody is below age, I believe 55 standard or better, they could get additional coverage with the Trendsetter LB. And actually, we will match the underwriting on like 64 different term carriers out there as long as it was fully underwritten. We could go to them if they bought from XYZ carrier and they had the old term product that's just a death benefit and they were preferred and bought it 5 years. It has to be under 5 years. They bought it 4 years ago. We may be able to give them additional coverage without doing all their medicals again. It's not a guarantee issue. They're going to do a script check. They're going to do potentially do a PHI and stuff like that. But if their health hasn't changed, they could get Trendsetter LB without having to do blood and urine analysis. We won't go and say you can switch from Trendsetter Super to Trendsetter LB, but I'll tell you, I see a lot of people that are going out and when approached with that saying, you know what, we ought to buy a little bit more coverage and use the Trendsetter LB and keep the Super to buy a lot of coverage cheap, but spend a little more to have this additional living care protection. And you'll be amazed at how many people have been doing that to great success. A lot of people, if you go back to 2007 and 8 when the financial crisis hit, they bought insurance, but they bought enough that they could afford at the time. And really, since things have changed, people are willing to start going out and buying the actual coverage they probably needed and are doing it with Trendsetter LB. But if it's in the first 5 years, under age 55 standard or better, we can maybe help them out without having to do all the medicals over again.
Wonderful. So I'm looking at your quick facts here on the LB product.
Mm-hmm.
Issue age is basically 18 to 80 for full underwriting. But you guys have a kind of a special niche too, because up to $249,999, they can do without an exam, correct?
Absolutely correct.
Okay, and that's for your standard product and your standard smoker product, correct?
Right.
Rating?
Yep.
Okay.
And so if you're on the call, you are in the simplified, or if you do more of a simplified term basis, this is a great approach because you could offer somebody on a simple, or it's not simplified, but it's, I would call a more simplified process where you could offer somebody living benefits on a more of a simplified basis without doing blood and urine up to that, as Kathy said, $249,999. That is a great competitive disadvantage against others that are in that more of that non-med term market. This is a great way to go and to be able to offer living benefits in that marketplace as well.
Okay, that's awesome. We're just called about that this morning, so just want to make sure we brought that up. Another question, sorry. So when you convert to a permanent policy, you lose the chronic care rider. Would they lose that, or do they get the opportunity to add, like, the true long-term care rider? How would they do that?
Those are great questions. Actually, when you convert it, you would lose that feature unless at that time we have gotten more of this type of a benefit on our permanent products. So really what you're doing on the conversion is you would want to keep the term as long as you could and not convert it, only because then you'd have the living benefits. When you convert it, mainly we see it converting just the remaining death benefit. But say down the road, they bought a $500,000 LB, wanted to convert to a permanent product, they would actually lose those living benefits. I've had people say, well, what if they went to the IUL and that had a long-term care rider? And it's important to note that long-term care rider and this is with any company, when you do a standalone long-term care rider, you underwrite that risk separately. And so that has to be, you can't just take an LB on a term and convert it to a long-term care rider. Most carriers, if not all, will usually on those long-term care riders on a permanent product, if the base insured isn't at least a table 4 or better, they won't offer you that long-term care rider. What I love about LB on top of this is I can give somebody up to table P, 16 tables I can offer them this, because I'm only underwriting the mortality. I'm only underwriting the likelihood they're going to die, not their morbidity, which is if they're going to live. And so we see a lot of people write LB at table 6, table 7, table 8, and have access to that. I am a big fella. I'm overweight. I'm going to have joint pain, stuff like that. I could never get a standalone long-term care rider, but I definitely could get Trendsetter LB because my mortality is still pretty good. So it's an option to use that. So along with that conversion piece is to note that Trendsetter LB can go all the way up to table 16, and you're underwriting just the likelihood of death. Those standalone riders are going to underwrite the traditional long-term care risk.
Okay. Do we have a 20-year and a 30-year LB? That we do.
We have a 10, 15, 20, 25, and 30-year.
That's nice. Wonderful.
And I will tell you the most common are 10, 20, and 30, with 20 being the most common. If I go back and look at our sales, the most common one we get is an LB 20-year term.
Really?
Yep.
I think we quote more 20-year term too. Okay. Well, I think we're going to wrap this up today. You've done a lot of questions, a lot of great information, feedback from the agents out here. So if anyone has any more questions, they can always direct this back to Premier at 1-800-365-8208. Just ask for a life marketer, and someone will be able to help you out. If you got any other information that you'd like us to help you out with, any quotes, please feel free to give us a call as well. Mark, I appreciate your time. This is a great seminar, webinar here that we've done. So I appreciate you being out here, and we're going to have to do this again someday. How's that sound?
Absolutely. Would love to.
Wonderful. You take care. Everybody else have a great day. Any final closings for us, Mark?
I would just pass on that we've got 2 promotions running right now that you'll see. We've got the Go the Extra Mile campaign that, based on sales through Halloween, where you can go out and if you do over 50,000 in production, could earn trips, could earn grills, TVs, whatever. You earn points to spend how you would like. And the other one is to be looking at it as what we're going to call the Insurables campaign, and that is really an educational program on IUL products. We could do a whole discussion on my thoughts and opinions on index life. I think that's a great product too. And so we're going to do some training on that product. And along with that, as you learn about the product we have and how to position that, there's chances to earn trips and rewards and bonuses based on learning and sitting through and answering quizzes on the different sessions for that. So we just launched that early last week, so we'll be looking for that throughout the summer as well.
Wonderful, wonderful. And a couple of people are asking for the phone number again, just to make sure everybody has it. It's 1-800-365-8208, and that is to Premier. And just ask for a life marketer. And I do have somebody asking about the IUL training. Do you have anything on your website or anything like that as far as like information on IUL training?
There is quite a bit of information and training out on AgentNet Info. One of the things that we should do is we'll set up maybe a webinar to go through that product and that type of rider. There's a lot of changes going to be happening with the NAIC on IUL illustrations that have come out just recently, so we're working on those, and maybe we could do that in maybe a month or a month or two, and we'll have even more information on that.
Wonderful, wonderful. But in the meantime, just give us a call here too, and we can help you with anything that any questions that you do have. So, well, thanks a lot, Mark. Everybody, appreciate it's been about 46 minutes on this, so this has been a great, great informal Life Weekly this week. So everybody have a great day and enjoy your week and take care. Talk to you guys later.
You.
Bye.
Thank you, everyone.